All right. I am super excited today. I've got a new guest on my podcast. We've been just having some amazing guests, but an amazing guest that I have today is Marianne Abib-Pech. She's a managing partner at Transitions First. Transitions First is an early stage deep tech venture fund accelerating industrial transitions. They back industrial technology companies with scalable technology, redefining how they produce in the 21st century. So excited to go a little deeper on that, but to go a bit further on her bio, she's a multicultural C-suite finance leader, turned entrepreneur, investor, and author of the Financial Times Guide to Leadership. After a fast-paced global career leading Shell Aviation's $20 billion business as a global CFO and pioneering mergers and acquisitions in frontier markets, now she heads up a deep tech venture fund focused on reshaping industrial supply chains through capital innovation. Marianne combines finance leadership, geopolitical insight, and strategic courage to challenge traditional venture models and reimagine how capital can drive industrial transformation. She spends time in San Francisco and Paris and also other parts of Europe. So Marianne, welcome to the show. And I think there's just so many things to unpack. So excited to go through all of it.
Thank you, Joe. It was like a really impressive introduction. I'm even impressed.
Oh, well, thank you. I mean, all I did was just read your bio. So you made it really easy for me. I'm just kind of reading the script here, but I hope that I covered everything and did you justice. But, it's always better to hear in your own words, because the bio sounds really polished, right? It sounds very, perfect as a easy sequence. Hey, I easily worked at Shell. I managed $20 billion. Now I'm running a venture fund. So, when we go through all these journeys and, we work behind the scenes, it's very complex and there's so many different pivots in our life and stories that back those pivots that we don't hear about, right? We just hear kind of the profile. So the purpose of this podcast is to also just learn a little more about who Marianne is, so tell me a little more about your early childhood, in terms of what you thought you would become and, aspirations that you had, maybe family members, mentors, people, maybe older cousins that were kind of pursuing their career. How did that shape you in terms of your ambitions to get into deep tech and, obviously work in the energy industry for some time? Would love to have you unpack all that and then talk about what you studied in college and how we got into some of those early careers. And then if it's okay, I'd like to also interrupt and maybe ask further questions as well.
Yeah. Okay. So early childhood. So I'm a French national. I was born and raised in a very small village in the south of France. I think it was like 1,500 inhabitants, and all my family history is a medical profession. My dad, my mom is a nurse. All my uncles are, dentist, doctors. What is interesting is like the second generation. Most of us are in business.
Sure.
So I think when you grew up in a very medical-oriented family, what happens is you develop empathy, you develop a taste for impact, but also it is a very entrepreneurial spirit because, a doctor is a doctor. He needs to find clients and everything. So I think empathy, impact, and entrepreneurial spirit was very much ingrained in my childhood. One person was very instrumental in me becoming what I am today. You say there's so many layers. I am a truly multi-dimensional person. Some people would say you're a Renaissance person, but it's so cliche. Don't use that anymore. I like multi-dimensional. And this person was my history teacher when I was 12 and 13 because he was covering 2 classes. And, I was always staying a bit later at the end of the classes with him, and we will talk about art, philosophy, everything, geopolitics and all that. And it shaped my thinking. It gave me one thing that is very ingrained on the top of impact is empathy, which is curiosity. And I think curiosity and impact were what drove my, I don't want to say my career because I think, it's life really.
Sure.
A journey, a people person is a life journey, right? So it drove my life. Then, obviously I went through university. I didn't know what I wanted to do when I grew up, but I always thought, do math, because if you're numerate, you can do anything.
So did your parents want you to become a doctor? Like, did they want you to be in healthcare in the beginning?
They kind of floated the idea at one point, but it never kind of stuck with me, and they were
Okay.
like with it. But also, my grandmother was also saying, so my parents were like, okay, Marianne, go into mathematics. You gotta be numerate. You gotta be numerical. But I also love writing. When I was a kid, I was very creative. I was doing dresses for my dolls, taking Polaroids, writing. I started writing at a very early age. And my grandmother always said, oh, Marianne, her natural gift is actually words, not numbers. So she kind of tried to push me towards more a creative writing career, but I was very stuck on, no, I want numbers, I want structure.
I'll say too, Michael Moritz, who's one of the top venture capitalists at Sequoia, he was a journalist, right? Mm-hmm. So I think there's something to private equity and venture capital. Half of it is being able to write things thoughtfully. With Sutton Capital, we mentor a lot of people that are looking to get into private equity, venture capital, and banking. And a big piece of it is, having an investment memo. But, I remember when I was doing this, I feel like a dinosaur, because I'm just like, I remember the days when I had to use Google to write a memo, right? And I actually had to write it myself. There wasn't something, but now it's like you type in a couple of prompts and there's a memo that can be written out for you. Obviously, you still need to orchestrate it. Yeah. But I think the writing part of it is still an important piece. And even if you get ChatGPT to write something or Claude for you, you still need to have conviction, because there's a lot at stake, right? If you're about to write a $2 million check, you don't want to just depend on ChatGPT to tell you that it's a good investment. You still have to have that conviction around that. But, the time that it takes to put together a spreadsheet, or the time that it takes to put together a deck, there's tools that can kind of format some of those things for you a little quicker. But still the creativity of what you should kind of shape in the thesis is still kind of a very human task, I would say. But I would love your thoughts on that.
So you're touching on a lot of different points. First of all, words and writing started with reading. And there is this amazing writer called Marianne Wolf that wrote this book called Reader, Do Not Give Up on Us Yet. And she's a neuroscientist, and she demonstrates how reading and writing develop your cognitive ability, because our brain is not naturally geared to write and read. So it's by learning and doing this. And that creates the reading and the writing give you, even in the day of artificial intelligence, I think the discipline to train your brain to do that is going to give you a massive competitive advantage in strategic thinking. When it comes to being a writer, for me, I wrote 2 books on leadership, but I also write, I wrote a column, I did a journalist, funny you saying, I started journalism in school as well at some point, but then life happened and I didn't finish it. But it gave me 3 things. First of all, writing is very close to venture in a way, because you got to be creative, you got to see beyond, you got to observe first. If you want to write, you got to live, you got to observe. Then you got to structure what you've observed in something that makes sense. And you have to push above and beyond what you just see, is trying to get deeper in what does it mean, how I can articulate it better and everything. And more importantly, when you are interacting with people, it gives you lenses, because you pay attention to words. And if you know how to decipher words, it gives you so much insight on a founder's psyche. This morning I was texting with one of our founders, and he said something like, he said, there are too many cooks in the kitchen. He just wrote that. And I interpreted, he's under stress, something has happened that probably could put our investment at risk or not. So I picked up the phone, because for me, those words meant something that signal a risk.
So when I say, and everybody digest those words differently. Like I'm a very visual person. So when you tell me that, I like picture three VCs in the kitchen trying to cook something, So I think the words also, which I think is really beautiful, ingrain a visual, depending on your learning style, right? Some people learn in systems. I just picture it, right? But like everybody's different. So the words kind of impact different people differently. So I think what you're saying too is sometimes you might need to choose your words differently depending on the person that you're delivering it to as well.
You mentioned artificial intelligence and how it fast tracked how we produce things. When it comes to venture and writing and how you differentiate, prompts are great, but the best prompts are based on your own ability to articulate your thinking.
Mm-hmm.
So it's about how do I articulate what I've observed, what my intuition is telling me. Mm-hmm. How do I articulate the depth of what I need to take a decision? And then obviously, how do I challenge and re-challenge the outcome to really get deeper and allow a much more thoughtful decision-making process. So I use, artificial intelligence for me is not about, it's less about creating documents, mm-hmm. is more a tool that I can use to challenge my own thinking, discover my blind spot when it comes to investing, but also articulate better strategy by challenging with different lenses.
Sure. That makes sense. No, and I think it's super important to really articulate and to kind of still guide the prompt. I think we're currently in the era where the human is still very much the orchestrator, and the robots. We had somebody come on yesterday that depicted it as essentially a fleet of agents, right? So you have agents that are doing something in the insurance space. There's an agent that does the claims. There's an agent that does the consumer journey, but it's still very much kind of guided by a human to kind of orchestrate this whole process. I think there'll be a next level where maybe there's a prompt writer, that kind of comes up with the prompts and orchestrates, right? I don't think we're there yet. But what are your reactions to that in terms of like the stage that we're in right now in AI and where it could go?
So, as you mentioned, I wrote the Financial Times Guide to Leadership, but what you might not know is I wrote 2 editions. Mm-hmm. 1 years ago, and one was just published and launched 2 weeks ago.
Sure.
And in it, I talked about the accelerator of leadership, and one of them is artificial intelligence. Mm-hmm. And for me, artificial intelligence can be used in 2 things. First is accelerate your business. It's productivity. Mm-hmm. But second is, as I was saying, enhance our thinking. I don't think artificial intelligence is yet replacing the way humans think, mm-hmm. because artificial intelligence does not absorb and integrate information in the 5 senses and 3 dimensions that we do. I mean, if you think about it, intelligence is created every day. You create intelligence every day. By me talking to you today is gonna, create thoughts, ideas, aha moment that I'm always gonna have in my head, and it's not codified anywhere. Mm-hmm. And unless we start to have neural links and the ability to capture live the amount of intelligence we create as human beings every day, I think human beings have a long way to go to think, create, and eventually invest and find underserved area of value and pocket of value.
No, I totally agree. And switching gears, I'd love to kind of hear a little more about your journey. So you kind of were trying to figure out what you wanted to specialize in. It seems like you had some family that was influencing you on medicine and using language, and then also obviously part of your family was in the business space as well. So walk me through kind of what was going on in your mind through college, and then what that ended up being when it came to your first job out of college.
So for me, it was what I wanted to do in my life very early. It was like I wanted to have an impact. I was like, I think my first venture, I was 12 years old or 13 years old. We were selling pastry at the during like at in high school, and I came up with the idea of, well, some people can buy a fresh pastry, but there are a lot of people that want to have a pastry, but it's too expensive for them. So why don't we recycle the pastry from the morning recess at a discount on the afternoon recess? So impact, equality was big. Come from my medical, my family background. Then when I started, I really didn't know what I wanted to do for a long time. So I just went on the be good at math because you can do everything. Then, get into a business school because you're good at math, you're good at French, you're good at English, but you're not excellent at math to go to an engineering school. And in fairness, I love people, I'm very curious, so an engineering school might not have been the best fit. So I went to a business school. When I went to a business school, I had the choice. I studied in France and in the UK. And then I had a choice of like, okay, what do you want to specialize on? And I thought, okay, what is a universal language? Finance is a universal language. So stick to finance, because it's going to give you a very practical tool to actually, communicate and drive value. So from finance was like, what do you want to do? I was not that much interested in investment banking at the time. And, but in my 50s, so back then, the golden path for, the horizon of ambition, as somebody said to me once, was actually the corporate world. So I went into corporate world, and I thought, okay, how do I leverage my finance background? Audit, because it gives you a really deep understanding of how things works. Then from audit, I moved to General Electric because, at that time it was the most admired company in the world, and what Jack Welch was doing with the company, i.e. the innovation, the pace, the momentum, was appealing to me. And then I went up to the CFO role. So in fairness, for a very long time, I didn't choose what I wanted to do. And, my career, the first part of my career, audit, GE, CFO, were very structured, very disciplined, but very traditional. What I didn't realize is while I was doing that, I was learning a key skill for my job today, which is really pretty much capital allocation. Because, when you're a CFO role, what do? You are constantly looking at risk reward. You are constantly looking at strategy. You're constantly looking at how do you take decision with data, which is sometimes incomplete, sometimes more complete, but always have consequences, and they're very real. You build process, you build narrative. So that was really the first foundation of my career. And with hindsight, because it's always a wonderful thing, the first building blocks of my transition or my conversions to venture. Then I stepped out. When I was 38, I was the CFO of Shell Aviation, 20 billion turnover company, before being 35. So it was really, really quick. And I thought, okay, I had my dream job. I want to do something else. What matters to me is decision making. How do I become an ultimate decision maker, right? It was like, become an entrepreneur. So I stepped out of the corporate world, started my entrepreneurship life, and founded an M&A boutique deploying foreign direct investment in frontiers market. But I'm going to let you in a little secret. Not any. Iran was very topical, very topical.
Sure.
So 2014 started doing business in Iran, and that gave me something. It changed my perception to risk completely, because everything was about uncertainty, volatility, navigating political risk, currency risk, and I also realized the power of human relationship. So that also kind of like, in a way, was another building block for coming finally into my calling, which is really venture and deep tech and industrial deep tech investing. But before that, I wanted to when I decided to branch out, create my own venture, I thought there's the myth of the entrepreneurship, but what is the reality? So it's the CFO, structure, discipline, data. So I started investing, and I started literally hanging out with entrepreneurs saying, well, I'm cutting a check, but I want to help, I want to shadow, I want to be with you. And that was fascinating because then I realized that it's all about the human leadership. It's all about the founders, how they see reality, how they force reality, how they pivot, how they federate people around their ideas. At the same time, I was writing my first book on leadership. So this gave me, curiosity, but also a way to codify. And I mean, if I look at what I do today, it was actually made me realize that when you are in venture, you actually not only underwriting a business, more importantly, you're underwriting a person. So underwriting the person requires some lenses on founder psychology, drivers, and everything. And writing the leadership, the book on leadership gave me that.
Sure.
And then eventually, all the pieces starting to converge. CFO, structure, discipline, entrepreneurs, risk, uncertainty, volatility, investors, writer, leadership lenses, and all that. And what was the best way to put all this to have impact and become an architect of something? Venture was a natural part. Now,
Sure.
obviously, I didn't start in venture. It was not a plan, but it was not entirely accidental either. I think all the experiences in my life led me to here today.
Sure. So I would say as a CFO, you do have some of the building blocks of being a capital allocator as well, right? Because there's corporate investing. Most big companies have a corporate venture arm. GE definitely does. NVIDIA, Salesforce, every Fortune 500 company, they need to innovate or die, right? I mean, their competitors are going to take up market share. So they want to obviously be involved in M&A transactions, plus also just do corporate innovation so they can kind of be on the edge of innovation. So you're looking at, obviously the only issue with corporate VC is there's like 10 levels of leadership before they can get approval to write a check into a startup, right? Versus when you're an angel investor, you're spending time with them directly. You obviously sometimes get emotional because you get passionate about what they're building. And sometimes that's something that you have to separate. But as you're mentoring these founders, supporting them, also writing checks behind the mentorship, you can move the capital much faster. And I think that's the biggest issue with a lot of people that are writing angel checks. Their check is quite small. And even syndicates, it's a never-ending cycle where you might have a deal, but then you don't have the investors. You might have the investor, and then you lost the allocation. So, the fund structure, closed-ended fund structure is always helpful because, once you have the capital, you can go ahead and deploy and take your time in deploying and make sure it's the right investments that align with the thesis and portfolio construction. So what are some of the things that you learned as a CFO? You talked about audits. Fund managers do audits as well. But what are some of the traits? And we've had, within our platform, we've had attorneys and also CFOs later go out. People that actually worked at fund admins go out and be part of a management team to start a fund. So I think I've got a few thoughts that I can riff with you. But what do you think some of those characteristics are from being kind of in the accounting / CFO discipline to carrying that over to being an institutional investor?
First of all, I'd like to make a comment. GE finance is business finance. So most of my corporate career, like I did 3 years in audit, 5 years in GE, 5 years as a CFO, right? So the GE part is very important because decisions are taken because it makes sense from a finance perspective. So you're not an accountant, you're not and it's not about ticking the boxes. It's about using capital and finance as a strategic tool. When it comes to fund management, for me, the fund I founded with my co-founder, which is in San Francisco, is about industrial. It's not just tech, it's industrial deep tech, which, if you think about it, most of them have the characteristic of corporate. It's long-term capital. It requires infrastructure. It requires capex. So it's very close to running a corporate. The fact that I come from a corporate environment and being a CFO allows me to do three different things when I look at an investment. First, it's about assessing very quickly if this particular product is going to be palatable in the realm of the industry that I know. I was in fast-moving consumer goods, oil and gas, financial services as well. I also did, I also had a brief time in mining and commodity. So all the industrial companies that we're looking at are producing things that are going to be a replacement or going to be an addition or going to help the supply chain. So understanding, okay, what do I know and who do I know still in those companies that can allow me to do a match, palatable, not palatable. So you have the mega trends, you have the tailwind mega trends, but also you have the reality. Industrial, their first customer are going to be corporate. Second, it gives you, when I look at a venture, even if we are early stage, what is always going through our mind is like, what is the potential exit? But when we say potential exit, I think M&A exit. And one could argue, well, you don't find unicorn with M&A, but from a fund management perspective, if you can do 3 or 4 or 5 really greatly executed mid-cap M&A transaction, you get the performance of the fund.
Yeah, and so you prefer the M&A versus the IPO, essentially.
Yes. One could argue, it's a fantasy because you do not control IPO, you do not control M&A. Fair point. However, the mid-cap M&A market, half 500 million to 1 billion, if you look at statistics over the last 25 years, it's always been resilient. So the likelihood, if you can, first of all, really help the startup find the product market fit and help them feel a need in those big corporate, you will definitely get at one point an M&A opportunity, product offering, productivity element, or even geographical expansion. And the last thing is because I come from a corporate environment and a CFO background, I believe in cash flow from operations. I don't believe in venture dollar. We want to back, help, drive cash generating business as quickly as possible. It's all about commercial, it's all about product market fit. And when we start the discussion with our founders, one of the first questions I ask, who's your first investor? And if people say the venture capital people, I'm like, not quite a fit. The first investor is your client.
Yeah, absolutely. I mean, I think it's super relevant as well with deep tech companies, right? I've invested in a handful of them myself. And the biggest issue with deep tech is obviously they're moonshot opportunities, but on top of that, it's very capital intensive. So if you're great at fundraising, that definitely helps. It's super important. You have to be able to, be able to fundraise because some of these projects, and I would love to, go a little deeper in the sectors that you're interested in. Yeah. But like most of these projects, we've invested in the space industry. You definitely, the ones that win are the ones that have had massive capital raises to support building the infrastructure, building the technology, but also having a big enough of a technical moat that it's hard to compete with, right? If you're rebuilding the space station, it's very difficult for your competitors, the 1 or 2 competitors, if you're doing it differently, to compete because you have a huge tech moat. Now you need a lot of capital to do that. But if you can, there are deep tech companies, especially now in the quantum space and the AI space, that can bootstrap by selling a service. Some of them have started as a consultancy, right? And then they find their first customers to fund the prototype, and it's a paid pilot. I've also seen on the other end several pilots, and then it never turns into a real enterprise customer. So I think there's the balance of that, where you don't want to be a company that just does hundreds of paid pilots, and then you don't really show recurring revenue or subscription annual revenue, for your services as well. So so I don't know, like, what's your reaction to what I just said?
A lot. First of all, CapEx intensive it's an interesting concept, because where I come from, uber CapEx intensive industry. I mean, oil and gas, it cannot be more capitalistic than that,
Sure.
And I worked mining for a while. You have to spend only 500 million, so 500 million only for pre-feasibility study, only to go and take pictures from space, from the soils and everything. So the CapEx intensive things, it's something I am used to, right? I understand the CapEx intensive. But what we look at is asset right. And I think, deep tech, and in our case, we are an industrial deep tech, so it's not, it's supply chain, right? We also look at, okay, how can we help them find an elegant, simple, and innovative solution to CapEx, right? And I mean, you'll be surprised, because you have a lot of orphan assets. You can also decide that, okay, we spend a lot of time looking at what is the core IP of those industrial deep tech, and asking the founders, or working with the founders on separating what the core IP requires from a manufacturing standpoint and stay in-house, what is not core to their mode, core to the technology, and then can be outsourced and externalized, right? And a lot of the company we have invested in have this dual model. They have the first part of the IP, which is done in-house, and then it's CMO and things like that. So it doesn't have to be all capital intensive. It can be smart. That's the first thing. The second thing, you say about space. I was one of the very first women investor in space in Europe.
Oh, wow.
Yeah, new space, like back in 2016, 2017. Sure. At the end of the day, right, there is a need. I mean, space is the last continent, and if you factor sustainability, and if you factor, the amount of productivity you would do building something in space. I've looked at a startup in Israel that was wanting to do mining in space, and then, for critical material, to answer the Critical Material Act and everything. A lot of things are happening there. And I mean, and it is, industrial and deep tech and space have the same issue. They are not perceived venture worthy, because there is one thing that they need that the venture capital world doesn't give, is time. It's time. If you look at an industrial project, for an industrial project to work, you list at minima, and when they're good and they are adequately financed and they have the right talent, 15 to 17 years.
Yeah. I mean, there was an aerospace company that I was looking at, and they said that the commercialization was going to take 14 years. That's essentially two entire fund cycles. So like one fund wouldn't even be able to, it would outlast the life of an actual fund.
Exactly. It's I mean, I challenge that thinking, because industrial deep tech is not a difficult, not sexy asset class. Is the way the financing world work is not fit for industrial deep tech.
Yeah. And I would say too, there are creative ways to support those longer time horizons. That's why we have continuation funds. And then also some of these funds that are getting to the end of fund one, they can use secondaries, right? So some of the exits, I would say, in space, I actually don't know when there could be or would be an M&A opportunity, but there are SPAC opportunities. If you're hitting a certain revenue, opportunity there, you could, that company could be identified as a SPAC target. So like Virgin Galactic was one of them. And then I think when you think about, secondaries, you could get you could wait and get a decent amount multiple and get out of that position with a secondary. And then I think the only thing that I would think about with M&A is it a cash offer? Is it a stock only offer? Is it cash and stock? So what would be your thoughts around that in terms of some of the other exit opportunities and maybe some new vehicles that you're thinking about? Because SPAC, people really started talking about SPACs like 5 years ago, in my opinion. Well, that's when I heard about it. So have you heard about other vehicles to give liquidity in the future?
So it's again, you're touching on a very excellent point. People are getting creative, but also always in a. I'm going to use that term, and it's not for a writer. I'm going to have a difficult moment because it's not a precise term.
Sure.
But people are looking at everything the private market or VC way,
Sure.
right? You talked about, well, we need an exit. Why?
Sure.
What about, going back to traditional finance, going back to 18th century merchant banking, going back to all the transgenerational capital companies that have been 100 years old, and you find them everywhere. Cog industry in the US, CMA CGM in Europe, like Tetra and everything, industrial company. If you remove the pressure of the exit, then it's a different game. So, you can compound wealth, you can compound return by moving away from I need to have an exit, but backing solid customer relevant, corporate relevant, cash rich, dividend distributing business. You give them time, and then the exit will eventually happen, or it doesn't matter. I mean,
well, I think at the end of the day, you've got LPs that have invested, and venture is illiquid. So if it's like a closed-ended fund, you want to give them, obviously some distributions to recycle. But you make a good point. You could deliver some of that outcome with just investing in great companies that are giving some cash distributions that you can distribute back. So that's an interesting model. And then there's also models that are evergreen, right? That are not closed-ended. And, I mentioned this on a podcast yesterday. I mean, if you think about Tribe Capital, if you think about A16Z, a lot of these companies are now moving to becoming an RIA or a holding company because they want to capture exactly what you're capturing, right? The company is now worth $1 trillion and they're generating, much more revenue than they were when you came in. So just selling a secondary would be great. But then to your point, that value creation and capturing that and having long-term investors that are okay with that longer tail. Now you're getting into essentially almost like an open-ended endowment model or a long-term evergreen fund, essentially, right? Yeah.
Okay. So it's about, like you have the choice. Hockey hot exit or compound returns. Hockey hot exit works for the bits. It doesn't work for the atoms. Or yet we haven't found a way to make it work for the atoms. And if you superimpose LP sentiment about the entire industry, private market, the lack of transparency, the questioning of why the fees, the lack of liquidity. Well, I think there is an argument to be made. It's a good time to innovate in how you finance industry, industrial.
Yeah. No, I totally agree. What are some pieces of advice that you would have for people? I know we got about 10 minutes left. What are some pieces of advice you'd have for people that are looking to start their own investment fund?
Don't. No, I'm just kidding.
Yeah.
No, do it because the more people get into the supporting, backing, financing any type of company. Obviously, for me, what matters is what I call society preserving companies. So industrial speak to my mind because extractive energy recycling, it is part of what we do. I mean, I love an open AI, I love a Deliveroo, I love that. But if you go back to we are human beings and the Maslow's pyramids of needs, you still need food, you still need shelter, you still need to go from place A to place B. So do not shy away, do get into the investing wagon, and do not shy away of industrial, of like real assets. I would tell them, which worked for us because we were an emerging fund, cross-border, industrial, capex tagged, capex heavy tagged, raising money in 2023 and 2024. It was brutal, but you know what? It only takes one, and it doesn't matter if your first fund is small. What matters is that you exist and you start building and you start making the noise we need to make. Be aware that fundraising is brutal. It is brutal. And at the end of the day, 95% of your fund is going to come from people you already know. So, be aware of conference frenzy. Better have like deeper conversation with 5 people than trying to be on the conference circuit.
Yeah, that's a big piece of feedback. So we run a fund accelerator. So we've graduated several fund managers that have all different backgrounds, right? I mean, private equity, hedge funds, venture funds, and many of them have different focus areas. But the biggest piece of feedback I've heard is they go to these events, they go to these conferences, and it's very surface level conversations. So what advice would you have for, number one, for people to build that top of funnel when conferences or conference frenzies? And then how can people build deeper connections? And I feel like some of this stems from your leadership, expertise and experience and the books that you've written, but, just relationship building 101. How do you build deeper conversations?
First of all, I go to a lot of conferences, but I have, and it's very interesting. And I'm a writer, so I observe how people operate, right? And you have the person who spent 5 minutes with everybody in the room. It's very transactional conversation and give a business card, right? I don't do that. I actually have maybe 5 conversations in a whole conference, but they are 20 to 30 minutes trying to, engage. Obviously, if the person in front of me is the person who's going to spend 5 minutes in transactional, it doesn't work, right?
Sure.
But it's all about like listening. It's all about trying to have depth instead of volume, and always follow up. I mean, it's follow up. And sometimes serendipity strikes. So, I met one of our investor at a conference in Dubai. I was at this, I don't know why I was at this conference. He doesn't know why he was at this conference, but we were sitting next to each other. And I mean, I don't know if you will see me, but at least you'll hear me. But you, Joel, who have seen me, I'm very, a passionate, I'm a French woman, right?
Yeah.
So, and I mumble and everything. And the speaker on the stage was not doing a great job. So I was kind of like a bit annoyed. And we kind of like connected on that, on like this, this particular speaker could have been better.
Yeah.
And started talking about, what he was doing, what I was doing. And then it led to having another follow-up call. And then we started having a conversation and we went to have a coffee together, another coffee. And that in 6 months turned into an investment. So the deeper human relationship, it's what you need to work for. So it's about letting the universe speak a little bit. Sounds a little bit like mystic, but don't try to be a decent human being. Be curious of the person.
Sure.
What this person wants to do, not what this person can give you.
Yeah. I had an LP that just gave some piece of advice, and he's I think he's based in Luxembourg or Germany. I think he's based in Germany, but he's from Portugal. So we went to Portugal and he just pinged, someone that he did not invest in. He was just like, look, I'm in Portugal, happy to catch up and grab coffee if you want. And that manager was just like, look, you know what? I'm not in market right now. So I'm good. And, you always want to have those relationships and the best time to fundraise is when you're not fundraising because there's no pressure. and you're cultivating that relationship as a human being versus trying to guard your time to just focus on the transaction. So I think some of the transacting happens when you're not transacting.
Yeah. I think you made two excellent points. One is availability.
Mm-hmm.
Even today, we're not fundraising, we closed the fund, we're deploying,
Yeah.
we are trying to think about the next phase, but working on something very unique. But I still have one day in my week where I just meet people.
Yeah.
I meet people to have a conversation, to get insight. And I always try to end the conversation with, how can I help? What can I bring you? Kind of like, not because it's a devious plan, but because I genuinely believe that collaboration trumps competition anytime.
Mm-hmm.
The
No, I
second
totally agree.
Be present.
Mm-hmm.
The amount of conversation you have with people where they're not there with you because they're checking their phone or what have you. And I
Sure.
think we are still going back to the artificial intelligence element, going back to my lenses as a writer. We're still human beings that need human interaction, but unfiltered, real, genuine, present human interaction.
Sure.
It's already a differentiator.
Yeah. And I think there's cues that you get. I mean, this is really interesting too, but there's cues that you can see visually and verbally and within the context that you don't see on Zoom. So like when you go to lunch with somebody, you're going to see how they treat the waiter. You're going to see how how quickly they order, right? If they take like 10 minutes and they can't just decide between which salad they want, right? That shows their decisiveness. And sometimes you just don't see those cues or signals when you do a Zoom meeting, because people on Zoom are polished, right? And they're rehearsed. But just kind of how you react to things, sometimes you don't see that unless you're, networking with them. And, obviously you'll see a little more extra cues when people have a few cocktails, right? So I guess my final question is, what are some things that you've noticed with different profiles of LPs, whether it's a business family, whether it's an institution, a fund to fund, and just different nuances with different regions? Maybe it's all the same, but are there different things you need to think about when you talk to LPs in Paris versus New York versus San Francisco, and just maybe the different personas and profiles in terms of just the capital raising environment?
Yeah. We're pretty lucky and unlucky at the same time, because I think, if you look at the investor universe, we have most of them. We have a semi-institutional, we have a fund of fund, we have ultra high net worth, and then private individual. And we have Asian LP, US LPs, European LPs. So it's pretty unique,
Sure.
right? And I think the fundraising happened most with the personal relationship that each of us, we are two GPs. I think my co-GP, it's a gentleman called Ali Chen, who used to be in Bluebird Venture. I think you met him.
Yeah, I do. Yeah.
Ali Chen and I, we co-founded Transitions First.
Okay.
So Alec was like really working on the European, on the Asian LP.
Yeah.
I was obviously working on the European LP, and we share the US LPs. And
Sure.
it goes to three things, right? Understand the culture, understand their driver, but the real driver, and invest time.
Sure.
What we like about our LP pool is, and we have a board meeting, an LP meeting tomorrow morning.
Yeah.
When we get this bunch of people together, we get immediate insights at the global level.
Sure.
So you get what's going on in Asia right now, what's going on in the US right now, what's going on in Europe right now, obviously, how the capital flow are working, what are the hot like trends that you're seeing? In which sector? Is it advanced material? Is it more biomanufacturing? What our investors are thinking? Are they more, what is their latest thinking on liquidity or lack there is? How do they perceive the asset class? So it's a little bit like General Electric,
Mm-hmm.
Electric had what they call BOCA once a year, where all the business were getting together, and you literally had the global economy at a micro scale in one place. So
Sure.
you had services. It was amazing to experience the amount of information and insight you are getting, and we have the same thing. So it's very important to. I think we don't say that enough from a fund perspective, but at the end of the day, an emerging fund is just like a startup. Your cap table matters.
Mm-hmm.
And if your cap table can have deep pocket, which is one thing, but more importantly, if your cap table, so your LPs can open doors, help you accelerate your portfolio and give you insight, you are differentiating and you are standing a better chance to create performance and returns.
Yeah, that's amazing. Well, Marianne, this was a really stimulating and interesting discussion. So thank you for taking time out of your busy schedule to educate the community and share your amazing story. So thank you so much, and hopefully we catch up with you and also your co-founder in person someday.
Yes, that would be fantastic. Thank
right.
you so much for having me.
Yeah, likewise. It was a lot of fun, and take care. Everybody else, have a great day.
Bye-bye.
All right. Take